All right, good morning, everybody. It's good to be with you. It is October 24th, 10 o'clock Mountain Standard Time. My name is Keith Bybee. This is the Hurley Investments Trade Findings and Adjustments. And I think there's some interesting things that we can go over today. Real quick, here's from my last meeting with you. Kevin had some interesting thoughts Tuesday night as well. If I remember right, it was a Visa call, Leap call, and a Baidu call. If you'd started new ones with those, Visa would certainly be looking good as of today, especially if you got into yesterday. And Baidu would just be down and looking to really just have a great price for leap long calls there that could make quite a bit of money into the future. So, but my thought there was hopefully you've been in some of the other ones that we've had with our Visa here. Hopefully you've been following along with Baidu, lowering your cost basis there, kind of working our way through, these a little bit longer term trades to make them profitable. So, just covering some of the things I talked about. We went over target covered calls. Those should look pretty good. I guess depending on where you got in, I know we talked about a 110 covered call a couple weeks ago, and then as it has come up, just moving a new one up for a 115 in case you didn't get filled on the other one. But that's another good thought. Let's just take a look at target real quick. Yeah, I mean, we haven't moved a ton. Having seen it move up above 110, that's where we said, okay, well, if you're going to get in a new one at this point, then move it up to 115. So that's kind of the same position at this point, where if you even wanted to start this position now, you could certainly still do it as it hasn't moved. And that's kind of good because that's the strategy we were looking for. Covered call, get some credit on the calls closing for either getting called away from your stock or booking a profit on that credit. So I would still look at that one if I were you. And if you hadn't gotten a chance to give that a try, if you want to see this, just go back to last Tuesday, not last Tuesday, but the one before, I think is when I went over this. It might have been last Thursday, but either way, you will find it and you'll be pretty much at the same cost basis. But as long as you get around that 3% potential profit when you add the point that you got in the stock versus the place that you're capped on the calls, on the short calls, adding in your credit in there, and dividing that, of course, by your overall position. So I'll let you go check that one out. I'm going to delete these, get rid of target. We did great on the Bank of America, Activision. I had done this, or at least a similar one. Actually, I think I did do this very one in my little personal account, and it's just been kind of flat as Activision just hasn't really moved yet. But that movement from the game sales that we're looking towards on, what is it, the 25th, so tomorrow, is really what we're looking at there. So another decent one. You could even get a better price today if you went with that. So I'm going to delete that. You can go back and check on that if you want to. I don't know why that's up there. So, but for today, sorry, just getting my formatting back here. Get rid of this guy. Okay. So today I had some interesting ideas that I'm just going to kind of walk through and look at with you. And formatting on this just kills me. All right. Couple more of you have showed up. Welcome. Just basically going over a few of the trades from the last trade findings in the last couple weeks. But for a new idea, I wanted to look at some bull puts potentially on Apple and Disney. So bull puts, I'm looking at a shorter time frame and something like that's weird. Gave me the wrong strike prices. Let's try that again. 230, 235. That's what I was looking for. It's about $1 of credit. Just take a look at this. So potential profit, obviously this is for 10 contracts, but just as a point of looking for risk and reward here, I like this little snapshot analysis. Apple trading at 242 just seems to keep going up, but even if it kind of stays the same, goes up a little bit, holds 240-ish, we can look at some profit within a week's time. Let me double check. Where is their earnings date? Is the 30th. So this would put you basically the day after that. So risk to reward is good for a bull put, 1 to 0.28. Be cooler if it was like 30 cents on the dollar, but that's not bad for a bull put. Some good distance, $7 or so below our current trading price compared to the 235 short put up there. So your risk in this one, as an idea, would be what? I'm going to put it to you. Any ideas what the biggest thing you would have to worry about here for a bull put on Apple? Throw out a guess. I'll even keep your name out of it. What should be my biggest concern with a trade like this? In a time frame like this? All right, Lance, thank you. Exactly. Lance says earnings. We just checked on the 30th. Bingo. So, but really, I'm just looking at seeing if we get a bit of a pop, and even if we just get 50 cents or half of our potential profit, close it, book a profit. We don't have to be into it through earnings. If you do want to wait till earnings, your thought process then at that point is simply, can I take stock ownership? Where if it falls down below 235 and you're willing to buy shares of Apple and can afford to buy shares of Apple at that point, then definitely consider it. It's not necessarily where I would love to buy Apple. 235, it certainly doesn't mean that it would keep falling or continue to go all the way to test 210, but if they don't get everything perfect because they've come up so far, even a little thing, of course it's Apple, so it's usually just a stupid little thing that causes a bit of a sell-off, and you could see it go back down to that level of 210 is that I would say the next really decent support level. Hopefully if it's something small, it wouldn't be so far, but that is the risk you'd be taking. So again, I would be looking at following up with this closer to the end of the day and making a decision then. But again, trying to get out before earnings. Oh, and here we have earnings right here. Duh. I forget they conveniently put it right there for us. So perfect. Let me take a picture of this one. And all right, going back to the order ticket. picture of that. So let's say Apple bull put 230, long put 235, short put credit, since it's a bull put, are looking about $1.10-ish. Trying to find those pictures. Still kind of getting used to this new computer. All right, so that's that one. Let's take a look at what did I say? Disney. Disney, kind of looking a similar idea here, but I'm going to look at something like this. So the first thing you'll notice, our risk to reward isn't quite as good as the Apple one, but the risk in stock movement is going to be much less, as Disney has this 130 support level, which obviously it's very close to today, but a little less volatile, and our earnings is after this expires. So less risk in waiting the full 8 days this credit spread has left, and getting a higher likelihood of a full max profit credit. On our short calls, short puts expiring worthless. So yes, not as good of technically a risk to reward, but in real stock consideration, volatility, yada, 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 earnings risk, Disney is currently a better idea. So let me get a picture of this one. Maybe I can do a little better job at figuring out where this actually gets saved to. I just want it to go to my desktop. Is that too much to ask? All right, forget it. I'll put it on when I can put it on, but just to write it in, and let's just check out real quick. Apple first, Apple chart, going into the stratosphere. It is a bit of a 235 support level, but that is, I would say, not going to matter if they don't get everything right on their earnings. So I said 210 support level. Maybe you could make a case for 215, but or even 225-ish. But I would say the strongest one would be around 210. Disney, back to Disney. Been kind of in this range, holding this 130. $2 under as a strike price where we get the 200-day moving average and a bit of a support level here trading wise. And let's see. One 125 long put, 128 short put, and credit of what did we see? Well, now it's like 48 cents, 49. So again, I would be looking towards the end of the day on this. Maybe I can't get 50 cents out of that one. So I'm going to say around 45 to 50 cents. Looking at the end of the day. Day, not Fay. All right. Another one I wanted to look at real quick was Ford. So they're hanging on to 850. I feel like they're at least going to test the bottom they've had here, if not get all the way down to 8 or even 750 would be ideal for a bearish trade. While I'm kind of looking through this one, is there any questions so far on anything we've looked at, my thought process? Hopefully I've kind of vocalized it for you, but so Ford, going to be looking more time, maybe like a November 22nd. Maybe even 29th even. That's not what I want to do. Oops. Let's see. Something like that. All right, so you can kind of see what I'm looking at, but I was trying to add, let's check out trying to see where we would keep the short put. This might be a little better. Let's see what 9 looks like. So I'm looking at doing a bearish trade on Ford, right? So Ford had some issues with their last earnings where even though they beat their earnings numbers by like 12 cents, which is pretty significant for Ford, they lowered their guidance for the next quarter or so on sales, which is kind of, well, it's obviously the reason that it's falling down, but it's also kind of stupid because no cars, no car companies do great the last quarter here. Everybody's spending money on Christmas presents and not going and buying cars. So kind of like, well, duh, but still the reason why they're headed down. But I really don't like what I'm seeing. I don't feel like this is really enough. Oh, that's a little better. So you can kind of see it is close to where it's trading. 850 on the short for, it's trading at 856, but it does give you a bit more credit and offset the cost of 58 cents of risk on the long. So I'm liking this more as I'm taking a look. You certainly could make the argument, well, why don't I just do this? $9 puts, see how low it gets. And again, this is certainly a decent option, but if for some reason we see Ford kind of ease back, it would be nice to have a short on there. Seeing it right at that 850, you could get a bounce and then continue to head down the next few days. But right now, I'm just going to put both of those bear put or long put. We decided 9, 850. And the debit of 30 cents. And really what I'm going to be thinking about as whether or not to do just a straight out long put is just the fact that there's not a ton of time. If I were to do a bear put as opposed to a long put on this time frame, it might make more sense. On the other hand, you're going to make money quicker if it continues to head down on just a straight long put. But you'd be looking at booking a profit and just yeah, looking to get a quick profit close within a few days, because you don't have the time to really sit through it as much. Now you could go longer term, but I just don't feel the risk of being in it longer term necessarily justifies what I would think would be somewhat of a shorter movement. So this one you could even wait on and look at tomorrow just to see some follow through, or seeing if it has a bounce on a big day. Obviously, you see, just looking at the past, you have a big couple days here for it in the beginning of October going down. Just on that kind of movement, you'd see here at the bottom a bit of a bounce. I'm just making the point really that after a big day or a big couple of down days, you could see it have a bit of a bounce back up and then continue down type of thing. Seems like that's sometimes how it goes, but looking at the end of the day today to see where it's at, it's about where it is, you could still consider going for it. And there's obviously no guarantee you get a bounce tomorrow. But those are some things you'd be considering at the end of the day today. And that the long put was 55 cents. I need to put dates on all these, don't I? November 8th. And this was 29th. You keep going further on that for a forward and it just gets a bit more expensive and may not be the best risk unless you have actual stock ownership you're trying to protect. But if that was the case, I would have hoped you'd had that on before their earnings like we did and are making up significant downward movement today. All right. Any questions, guys? So you do have a question. All right, so question is there a reason for waiting till the end of day? And if market outlook changes, would you change anything? So I would just be looking at each of those positions and seeing how they would change. And the reason for the end of the day is because trading in the middle of the day, a lot of times you just get kind of swung around, and you typically see big money making their moves the last hour, which is kind of the more um, important thing to see, because midday you get retail trading that can kind of fool you into some trades, and then be upset by the end of the day. Is kind of the thought process there. So let me just take a look where we're at. Edging towards all-time highs. And this is where we're going to want to see, at least at the end of the day, where the market heads. We kind of want to see it stay above 3,000. It's a big round number, and it's the market top almost to the very top of all-time highs. So you see it kind of holding these numbers, and if not even heading up a bit more, that at least would give me more confidence in putting trades in based on that overall market view. Does that help understand? Does that help you understand kind of my thought process for the end of the day? Perfect. All right, so with that, I'm gonna have to see if I can't get on those pictures, screenshots here afterwards, just so I'm not wasting some time trying to rummage through files for you. And once it gets posted though, you can go ahead and take a look at it. But for now, here is what we've got. Apple November 8th, expiration bull put, 230 long put against a 235 short put. A bullish trade, credit of about $1.10-ish. Again, wanting to be out by, so with earnings on the 30th, it would be best to be out. Best to be out with a profit before then. Now it is a bull put, so it would go against your long put, and you would just lose that margin of 5 minus your credit for 390 if it headed down after. But again, I would be looking to get out of this one, hopefully with a profit before the 30th. Nope. Disney, same expiration, November 8th, bull put 125 against a 128 short, credit of 45 to 50 cents. It's a little less risky than the Apple trade, but let's say, and you can let it expire with less risk, since their earnings is on the 7th or 8th of November. Let's see, let me double check so I'm not lying here. Seventh, so I lied. So I guess either way, you're going to have to worry about getting out of those with it expiring on the 8th. Actually, it was November 1st. That's why. All right. I lied again. November 1st. Got confused because it's 8 days from now. November 1st. All right. Good job, Keeve. Important correction. So there you go. November 1st. This is still true. You get less risk than the Apple trade because you can let it expire for full product profit and do it before the earnings for Disney on November 8th because you'd have full profit on November 1st if it continues to hold that 130 price or anything above, obviously 128. Forward, November 29th, like 36 days, bear put or long put, 9 strike put against an 850 short put for a debit of 30 cents. This gets you less potential profit than a forward long put, but with the amount of time you do have the ability to have that short put give you a little bit of help if it gets a day or two where Ford tries to fight back up or just kind of stays around 850 or what have you. That's what you're going to be thinking about. But just to look again at Ford, now down to 860. So even if it goes down and tests this nearest low at 840-ish, you'd be profitable, could get out. But I would really be looking at seeing where it goes down to 8. So those are two options there. Long put's going to be more profitable. Bear put spread is going to be less risky. So some good options there for you guys. Is there any other questions before I wrap it up and give you these screenshots on here so that I can get this out of here? Oops, this is even cheaper. Not seeing any questions come over, so I'm going to take that as a good thing. But go ahead and look at those at the end of the day, make your decision, and check the market out. See if it's kind of either flat or still holding gains for the day. Check out each of these positions or whichever one you feel you're most interested in at this point, and I say go for it. Last couple seconds to have you look at this if you need to, give yourself a screenshot now if you're wanting to look at these end of day. I would think I would get this out sooner than later, but not sure if Kevin is in a position to then add it to the blog site. So make sure and take a look at this as long as you need to right now. And guys, if there's no other questions, I will give you a couple more seconds here and wish you a wonderful Thursday afternoon and good luck and a relaxing weekend. All right, guys. Remember November 1st, not November 8th. Thank goodness we caught that. Appreciate your joining me. Have a wonderful day. Bye.